welcome to the weekly trend trader, how to do trend following. What we're going to do, we're going to look as always at 3 markets from the Asian region, 5 markets from the European region, and 3 markets from the USA. And every single one of those markets are giving an enormous signal that says a serious global stock market sell-off is imminent. As we look at the charts together, we'll see exactly why. If you haven't subscribed, don't forget to subscribe. If you have subscribed already, thank you very much for your support to the channel. It means a lot to us. Don't forget to like this particular video and to share it with your friends, because you may have friends that want to create a part-time income alongside what they're doing, or maybe even create a full-time trading income. And this strategy lends itself very, very well to that. Also, don't forget when you subscribe to hit the notifications bell too, because it's when you hit the notifications bell that YouTube can alert you to the fact that we've uploaded the latest video. And the information I'm sharing with you, 20 years trading experience, but it's time critical information. So go ahead and hit that notifications bell as well. Right, so let's look at the Asia region, and let's look at 3 stock markets and see what they are saying about the serious global stock market sell-off that is imminent. So let's start with the Hang Seng. So here's the Hang Seng. Here's our first signal. Look at the 52-week moving average. It is in a downtrend already, and it has been in a downtrend for 2 years. But the setup that we have right now, the market's run up. Every time we've run up to that falling 52-week moving average on the Hang Seng, we've experienced price rejection. What happened? Well, last week we ran up, we got up to almost that 25,000 level as the high. We experienced price rejection, and we had a heavy sell-off to close the market at just around 24,000. That's our first indicator that it's a sign of weakness. This market cannot, for over 2 years, consistently trade above the falling 52-week moving average. Quick look at the RSI. Look at the RSI for the whole of 2020. The RSI has been below the 50 median average. That is a bearish bias. So the market has a bearish bias. If it gets any unsavory news, anything that concerns the market while there's a bearish bias, it will sell off. So that's the Hang Seng. Let's take a look at China. So here's China, the Shanghai Composite. Let's look at this market. What do we see? First, we look at this chart and we can see it's been ranging for a long period of time. Most of 2019 and 2020, it's just been trading sideways. We look at the 52-week moving average and it's pretty flat, running right the way through the middle of the price action. But then what happened in the summer? Well, in the summer, we had this little bit of a breakout here where the market ran up to 34.50 back in June and July. So the market hit that level, 34.50. What happened? Experienced price rejection, fell back to 3,200. Again, market ran up, had a go at it again in August, got to 34.50. What happened? Experienced price rejection and ran down to this level of 3,200. Then in this month of October, the best the market could do, couldn't even get back to 34.50. It did 33.50, experienced price rejection, and this last week we've closed right on the neckline of the double top. There's the double top at 34.50. We hit it first week of July. We hit it again August, tested it twice, 34.50, experienced price rejection. Built that neckline level at 3,200. If we close below 3,200 this week, which I expect the market to do, we will see serious selling on the Shanghai Composite in China. That's what's happening. Very exciting times on these markets. Let's go across and look at the Nikkei in Japan. So here's the Nikkei in Japan. Pretty flat. Look at the 52-week moving average. Pretty flat on this one. But when we look at the beginning of this year, December, January, we had that level of 24,000, which was a resistance level. We came off that level. There's the COVID situation, slowdown in the economy, and the market falls back all the way until March. From March there, we had the V-spike recovery trade. The market started to run back up in Japan, got inverse head and shoulders there in March, and the market makes a run from it from the first week of April all the way until the end of July, where the lines cross and we take our profits. But then the markets tried this slow grind higher to retest that high of 24,000. We've climbed in July, August, September. This month, October, we've hit this level of resistance that we've seen on a previous months of 2350, 23,500. Every time we hit that level of 23,500, the market experiences price rejection. It cannot get up to that previous high set back in December and January of this year of 24,000. Market now has dropped back to 23,000. There is tremendous weakness on the markets at the moment. There's a lot of worry, a lot of fear, rising COVID, uncertainty on the markets. We break 23,000 this week, we will see a heavy sell-off on this Japanese market. So the Asia region, always check the region. I say check the region. Hang Seng, weak. China, weak. Japan, weak. The region is going to sell off. But that's not the only region in the world that's going to sell off. There's even more that tells us there is a major global stock market sell-off brewing. Let's move over to Europe and let's look at the FTSE 100. So here's the FTSE 100 in the United Kingdom. Look at the 52-week moving average there. Most of 2018, 2019, pretty flat, running through the middle of the price action. However, we had that level of 7,600 that we bounced off in June and July 2019, and we bounced off it again in December and January of this year. It was the slowdown of the economy. The resistance level was already in place anyway. So even if we hadn't had COVID-19, there would have been a sell-off because we've got a double top at 7,600. The COVID situation just accelerated when we slowed the economy down by shutting everything up, accelerated the situation, the double top pattern that was already there. The market falls away, it drops all the way until March. Look at that inverse head and shoulders where we tried to make a recovery in March. On the first week in April, the market runs up all the way to May, but the best it can do is 6,500 on the FTSE 100. But what's happening? Look at the 52-week moving average. The 52-week moving average is falling. The market cannot close above the 52-week moving average. That's giving us our trend. The FTSE 100 is in a downtrend. What happened from May? We've just seen this slow bleed lower. The market cannot close anywhere near that falling 52-week moving average. This week, what happened? Massive sell-off on the FTSE 100. 5,800, we've dropped down to 5,600. It's a massive sign of weakness, continuing that downtrend. Take a glance at the RSI. Where are we? For the entire year of 2020, the RSI has been below that 50 median average. What does that mean? Below the 50, we have a bearish bias. Above the 50, we have a bullish bias. The FTSE 100 has been bearish the entire time. So that's the first of the European market showing weakness. Let's move over and look at France. So here's the French market, the CAC 40 in France. We had that double top there in January and February. Market sold off for the COVID situation, dropped all the way down to March, where we had that inverse head and shoulders. Market tried to recover there, didn't stage that great a recovery, got out at 4,700 if we took this one long. Market dropped back to the swing low at 4,200. That's in May. Market runs all the way until June, where it hits the resistance of the falling 52-week moving average. Hits it in June, experiences price rejection, market falls back. Hits it again in July. What happens? Market experiences price rejection. It falls back. Market hits the 52-week moving average again in August. What happens? Market experience price rejection and the market falls back. September, same thing. Hit that 52-week moving average. Market experiences price rejection. But here's the key to show that we're in a lower situation here. Number one, we've got a falling 52-week moving average. Number two, look at the lows since May. We're now putting in lower lows, including this week where we closed at 4,600. Number three, look at the RSI. The RSI cannot close above the 50 level. It has a bearish bias. Any bad news that comes to this market, it's going to continue to fall. It's got COVID rising in France, rising around the globe. Traders are going to be very, very nervous of this, the uncertainty that this brings, and the market is going to sell off. That's the French market. Let's look at the biggest economy in Europe, the German. So here's the Dax in Germany. German market, as we've said, the biggest economy in Europe. Look at the situation. We had that massive sell-off in January. Market tumbled all the way until March with the COVID sell-off. Very sharp recovery there. If you bought this one from the first week in April, nice little recovery trade from that inverse head and shoulders that we had on the RSI. Bought this one on the first week of April, sat tight, sat on your hands until July, where the lines cross, and we took our profits. But what's happened since July? What's happened this summer? Well, things have got a little bit tricky for the German DAX. If we see there, the all-time high for the year, for the period, was about 13,700. Market tried to retest this level back in August. The best it could do was 13,500 during the week. Couldn't close there for the week. What happened? We experienced price rejection, and the market slowly fell away all the way down to 12,500 in September. Market tried to push up again, heavy resistance at 13,000. As the market got up, the German DAX to 13,000 experienced even more sellers, and in the last 3 weeks, the German DAX has closed down. This week, market gapped away, huge gap on the open on Monday, fell for the entire week, and closed at the low of 11,500. Take a look at the RSI. We can see there that the market is now broken down below the 50, which is a bearish bias. So the German DAX is under tremendous selling pressure here. We expect more selling and a serious correction with the rest of the world to follow. Let's look at Spain. So here's the Spanish IBEX market. We had that high testing pin bar there in January saying something wasn't right. RSI also had that double top. We had high testing pin bar, double top on the RSI, round number of 10,000. These three things tell you this market is about to correct. So the market starts to fall away, gaps away there, lines cross telling us to short this one. The market drops all the way until March, where it bottoms and it tries to stage a recovery. However, the market can only do its very best in May and get up to that level of 8,000. But look at the 52-week moving average. The 52-week moving average is falling, and it has been falling for the entire 2-year period of this chart. 8,000 was the best it could do. End of May, beginning of June, the market falls away, and it's just drifted lower and lower and lower. Again, look at the RSI. The RSI is falling. Look at the lows since May, and we've just been experiencing lower lows in this drifting downward trend. We've just put in a new low this week with the selling that we have seen. Again, look at the RSI. The RSI for the entire 2020 period since that double top that we had in January has just been a bearish bias. It's below that 50 level. There's nothing there for us unless you are shorting this particular market. That's the IBEX. Let's look at one more in Europe. Here's the FTSE Movespa in Italy. Now look at the situation there. High testing pin bar at the round number of 25,000. Double top on the RSI. This tells us to sell this market. Sell this market. High testing pin bar, round number of 25,000. Market likes to reverse at round numbers. Double top on the RSI, and the market absolutely collapses away, gaps away that week, lines cross confirming everything for us, and the market falls all the way until May on the global shutdown. Situation then, market tries to recover. So from March, it slowly stages a recovery, and the market puts in a stellar high at 21,000 in July. We test that level during the week, but we close below 21,000 after price rejection. Very, very key. We've got a falling 52-week moving average. In May, we hit that level and we experienced price rejection and selling. In July, we broke above that level. We went all the way until 21,000, but we couldn't stay up there for the week. We experienced price rejection and we closed back below that falling 52-week moving average. Very, very significant. Then again in July and August, we tested that level of 20,000. We couldn't close above that 20,000 level. As far as I was concerned, there was a head and shoulders in place there with the head at 21,000, the left shoulder in May at 20,000, the right shoulder in August at 20,000, the neckline's at 19,000. We broke that neckline. We came back, tested that neckline the last couple of weeks. We failed there, and now we're seeing this market absolutely collapse in fulfillment of that head and shoulders pattern. So some really powerful things here. If you appreciate the 20 years of trading experience I'm sharing with you, do me a favor and give me a thumbs up. Give me that like for the YouTube algorithm so that other people can see this amazing content that I'm sharing with you and they can learn something too about how professional traders trade. Also, don't forget to subscribe and to share this with your friends, because you may have friends that want to create a part-time income. They're looking for something to do. They've maybe lost their job, and this strategy lends itself perfectly for that. Also, drop us your comments. You may have caught some beautiful trends. You may have caught that one where we went down on the COVID situation. You may be setting up now, taking shorts on the situation that's setting up, the sell-off that's coming. Whatever you're doing, drop us a line. Just drop us the comment so that we can see, because we love to share your successes with you. Right, let's move over to the USA region. So here's the markets in the USA. Now, interestingly, go back to January, and there in January and February, we'll look at the chart at 29,500 round number. Remember, market likes to reverse at round number. 29,500 on the chart. There's a double top pattern. What happens? Market reverses, lines cross, and the market absolutely collapses down to March. In March, we have an inverse head and shoulders on the RSI. That tells us this one's going to reverse quite quickly here. Opportunity to buy this one long. Lines cross in April. We take our profits from the short, but at the same time, we reverse this one and go long. So we buy this one in April and we ride this one all the way until June, where we get an opportunity to take our profits. But then in June, we get another opportunity bouncing on the 50 on the RSI, buy this one long, we're in, it's 26,000, we buy this one long in June and we sit tight, we sit on our hands, we ride this trade all the way until September, where we get an opportunity to take our profits. But what's going on now? Why are we confident? There is a serious global stock market sell-off imminent. Well, have a look at the double top. At the round number, 29,000. We've got the double top in place. We're right there at the neckline. The RSI is just poking its head below the 50 level. Further selling this week, perhaps when the election comes in, plus the rise in COVID, plus earnings season, all this is put into the melting pot, and this gives us the perfect storm for a massive sell-off with the markets uncertain with so many different issues in play. That's the Dow. Let's take a look at the most watched market in the world, the S&P 500. So here's the S&P 500. Again, look at that situation there, 3,500. There's a double top in place. This market is saying to us there is massive weakness here. 3,500, double top is in place. If we get further selling this week, which we expect, the neckline of the double top will break. Then we will experience some serious selling. Prepare yourself for that one. Get on the right side of this one. If the lines cross, which they have, it gives you an opportunity to take a short. You can make money as the market falls. That's the S&P 500. Double top is clear. Market's about to really sell off. I mean, we had a market that moved this week. Last 3 weeks we've had selling, but we ain't seen nothing yet. Let's look at the Nasdaq. Again, Nasdaq had an absolutely amazing run on the upside, but look at that situation that when we had the COVID situation back in January and February, look at the setup that we had. We're at 9,500, round number. Markets love to reverse at round numbers. We had that high testing pin bar in February at 9,500. We had a double top on the RSI at the 80 level. 80 is overbought. We've got several things there that say sell this Nasdaq market. Take a short or take your profits. High testing pin bar, 9,500 round number. Markets love to reverse there. Double top on the RSI at the 80 level, which is overbought. All these things tend us to short the market, and the Nasdaq absolutely collapses and drops all the way until March. We've got an inverse head and shoulders there, giving us an opportunity to reverse this trade and take it the other way. Lines cross at 8,000. We take our profits 8,000 from the short and we go long on the first week in April. And what happens? The market runs up from April, May, June, July, August, September. Absolutely fantastic trade if you rode this trend. The trend is your friend until the bend at the end. The market ran up for 6 months, gave you an opportunity to take your profits. Then the market made another go for it again in late August, beginning of September. But what happened? The market ran up to that 12,000 level, experienced the double top pattern that is in place now. We've got the double top in place in August, 12,000, we fell back. We've gone back up there again. In October, we've tested 12,000. Last 2-3 weeks, we've experienced selling. The double top is in place. This is a reversal pattern. The market is about to seriously correct. Tech stocks particularly have gone up too far, too fast. So we've got an absolutely fascinating week coming ahead for the USA markets. You've got rising COVID, you've got the election, you've got earnings season. This is the perfect storm, and the USA market with the other markets are expected to collapse with absolutely heavy selling this week. Now, I've talked about a lot of things here. RSI, double tops, double bottom, a lot of things that you might not be familiar with. Where you get in, where to get out, where do you put your stops. So what I'm going to do, I'm going to put up a strategy video. Watch that strategy video that I'll link in here. That will explain how the strategy works and how we capture these enormous wins like this one on the Nasdaq that started in April and went all the way until September, a 6-month winning trade. But we explain exactly how that's done in that strategy video. Now, you might like to trade stocks more. You might like momentum trading more. The other video that's there is the latest momentum trading video. Have a look at that, and that will help you and guide you with your momentum trading. Thank you for watching. Thank you for subscribing. Until next week, when all of this that we're talking about unfolds in the markets, take care.